The stock market bear trap is set to snap on Tuesday. I have all the details and what you need to be aware of right here in the video, so let's get right into it. Also, quick side note, if you're interested in picking up some free stocks, make sure to check out the link down below in the description or at the top of the comment section, as they are now running a promotion that if you use that link to sign up, you can grab some free stocks when you deposit at least 1 penny. So, pretty cool offer. Make sure to check out the link down below if you're interested. If not, that's totally cool too. All right, so let's get into it and talk about the bear trap that is setting up to snap closed on Tuesday morning. All right, so you've probably seen this in the headlines, or maybe you've seen some people talking about this, or you've just seen this around somewhere, but the market is setting up right now with a very precarious situation. Over the last couple weeks here, we've been seeing this massive move higher, a big old rally in stocks, and we've been seeing a lot of big hedge fund people out there, a lot of big banks, CEOs, a lot of very high profile people coming out suggesting, look out everybody, this is likely just a big old bear trap. This thing is going to snap closed and trap a lot of people, and it's not going to be a fun situation. So why am I saying on Tuesday morning? Here's what's coming out. Right away on Tuesday morning, we're going to be getting the next CPI data release, otherwise known as Consumer Price Index, or the inflation report for last month. So we do know that this is a very highly anticipated number, and we do know that these announcements have been very volatile in the stock market over the last several months because inflation is very high right now, and remember this much as well. Whatever happens with this report, it is likely going to predicate what happens out of the Federal Reserve over their coming meetings, which, by the way, they just had a meeting about a week and a half or so ago, and they have another one coming up in mid-March. So again, every 6 weeks, the Federal Reserve meets for their FOMC meeting, and then we get Jerome Powell to come out and announce what he's doing and all this business like this, and talk about the economy, as well as answer very crafted answers from reporters and people that are asking him questions. So my point is, the morning of Tuesday. Now, again, no guarantees here. We don't know for sure, but based on what it's looking like right now, and all the details behind this, it looks like this massive rally may come to an abrupt stop right away on Tuesday morning, or maybe it's a really good report, and maybe this thing continues to charge higher. But again, based on what these big banks, the CEOs, the hedge funds, the high-profile people are coming out suggesting right now, they're saying this thing could be coming into an end very fast here, and this is likely just another bear market rally. And again, before we see this next major lower. So again, this is something we'll have to watch very closely here going forward, because we certainly don't want anybody to lose money with all this, right? But again, remember, it's kind of the nature of the game, right? Unfortunately, it's one of these games, as in investing in the markets and trading, whether it's short-term, long-term, anything like this, swing trading, stuff like this. It's unfortunately kind of the nature of the game, right? So just want to make sure that we all are aware of what's actually going on here. So we got to continue watching this very closely. And again, on the day of, so after we get that report, I will come out after I have a chance to do a bunch of research, dig into the CPI data and see what's going on here, because a lot of the times what happens is we get the inflation report, it comes out, and they say, look, inflation went down. And then I say, oh yeah, really? Let's look into the report here and see what they're not telling us, because they always just look at the headline number and they tell us, oh, don't worry, inflation is going down a lot. And then we look into the report and say, okay, yeah, prices on airline tickets, used cars, and like some other weird ambiguous item has gone down like 5%. Meanwhile, if we look at things like shelter, food, housing, things like that people are actually spending money on every single month, we look and say, oh, look at that. It went up another 0.4%, another 0.7%, or something like that. So, of course, after we get that CPI number on Tuesday morning, I'll be right back here for you after I have a chance to look through it and break down all those details for you as well. One more thing that I want to point out as well. These reports have been providing a lot of volatility in the markets, just like the FOMC meetings, just like the non-farm payroll numbers that come out the first Friday of every month as well. But one more thing that I want to say as well is, a lot of times right now, good news is bad news, okay? So we got to take that into consideration as well, because remember this much. When we get so-called good news, as in inflation is going down, a ton of jobs were created, with the last non-farm payroll number, when we get reports like this, is it really the best news in the world? Well, depends how you look at it. On an economic standpoint, yeah, it might be good news. However, when we look at it from the standpoint of the Federal Reserve, they might look at it and say, this is not good news for us because this just simply means that consumers now have even more purchasing power. Therefore, we need to raise rates even higher, right? So we know Federal Reserve continues to raise rates. In fact, they were just out a couple days ago suggesting we're likely going to be raising rates higher for longer, okay? Maybe next year in 2024, they might start lowering or cutting rates. Well, guess what? When they start cutting, what does that mean? It means that the economy is in the crapper, right? That's basically what it means. So that's when they say that they're going to cut rates, it literally means that the economy is not doing very well. Otherwise, if the economy is doing fine, if the economy is strong according to their perception on it, they're not going to cut rates. They're not going to do that, right? They're going to continue to raise into a strong economy, or at least they should be, because that's the time to do it. They never want to raise into a weak economy, as that is kind of counterproductive, right? So the whole purpose is when they say that they're going to start cutting next year or whenever it happens to be, just use that as your signal suggesting that they anticipate the economy is likely going to be weaker in the future as a result of their policies and raising interest rates because they don't cut in a strong market. There's no need to. They need to cut in a weak market. That's the point behind it, right? So it's basically all about the appetite to borrow money. That's literally all it's about, right? When interest rates are high, as they're doing now, it gives people the incentive to save money and less incentive to borrow money. When interest rates are very low, there's no incentive to save money because we're losing money at that point. Well, we're basically always losing money to depletion of purchasing power and inflation. But basically, the incentive to save money is less and the incentive to borrow money is more, right? You kind of see it. That's literally all it comes down to. That's the whole purpose behind the Federal Reserve raising interest rates, lowering interest rates, or holding steady, whatever they're deciding to do. As of right now, they're still raising. They've been raising for almost a year now. And they will likely raise yet again in their next meeting in about, 4 weeks, 5 weeks, something like that, about 5 weeks or so. When they have their next meeting, they will likely be raising yet again. So again, how long will they continue raising for? Well, that's the big question. And the report right away on Tuesday morning, the CPI, the inflation report, will be another indicator to see what's going on with inflation. What is it really going down, or is it just the fabricated headline numbers that they're telling us that might be going down a little bit on some weird ambiguous items that virtually nobody buys except for maybe once every couple of years. So either way, I'll continue to keep you posted, but according to what I'm seeing out there right now, what I've been reading on this, what I've been researching on this, a lot of people are suggesting this may be the final snap of the bear trap, right? So obviously it is not a real bear trap. It is a figure of speech, and it's just a thing, like a metaphor within the markets, which basically says a major rally up to above some type of resistance level or some type of thing like that. Just like the golden cross that we've been hearing about as well, right? Have you been hearing about this joke of a thing? The golden cross. I mean, let's just be real for a second. Who cares? It's moving averages. Moving averages are lagging. They tell us nothing. We want to look at price right here, right now, in real time. Who cares about a moving average that is lagging, significantly? Who cares? Doesn't matter at all. But they continue to say, look out, the golden cross. It's a great buying opportunity. Why would we buy now? The market's up like 15% over the last few weeks here. Why would we buy now? It makes no sense at all, right? So, anyway, the best time to buy would have been like, I don't know, a couple months ago when the market was a lot lower, right? But again, what do we know? Anyway, I'm here for you in any way that I can be. Please make sure to check out that link down below in the description. If you want to check out some free stocks, make sure to just look at that link there. You can grab some free stocks simply by signing up and again, depositing 1 penny, and you'll grab some shares there. So check that out if you're interested. If not, totally fine. Doesn't matter to me. I just like to point stuff out like this for you because it's kind of cool. When I did it, when I signed up and I used the link as well, I got a share of Starbucks, and by the time, or when I got that, I should say, it was about $88 for the share. So I was super jacked up about it. I was super excited about it. I also got a few others as well along with that. So that was just the big one that I was super excited about. There were some others in there that were like, I don't know, $3, $4, $5, something like that. But I was super excited about the $88 share. So anyway. anyway, check that out if you're interested. Otherwise, make sure to subscribe down below if you haven't done so yet. It's totally free to do so. Share the video with your friends, family, social media, and go back and check out any of the other thousands of videos here on the channel. And also, stay tuned as we get that report right away on Tuesday. I'll bring that to your attention right away. So enjoy, and catch you again later in the next video.